Hello everyone, this is Muhammad from StarseedFX. In this video, I will explain why marking out key trading zones on higher time frames can be the missing link to your trading success on the smaller time frame. Discover how this strategy can amplify your trading potential and unlock new opportunities. Today, I'm using a buy example that was sent to our StarseedFX members about 3 or 4 days ago. Here, Great Britain Swiss franc is moving bullish. So here I have a break of structure, confirmed, higher low, confirmed. So I can use Fibonacci from the higher low to the highest point of the market or the top of the highest bullish candle here. And then I can draw my trading zone or demand zone. I will trade only when the price drop to my demand zone. As we already know from the past videos, we are going to buy from the demand zone or from the discount zone. We are going to sell from the premium zone. If the market moving up, I will adjust my Fibonacci accordingly and also will adjust my demand zone or discount zone. So let's move the chart now and see what will happen. Now the market is retracing down, up again. Now I have this wick higher than the previous one, so I can extend my trading zone here and see what will happen. Here, another adjustments that I have to do to my demand zone and Fibonacci. And then the market now is moving sharply down, almost hitting my demand zone. Goes up again. Okay. Now the market is in my demand zone, touching the 50%. If we are going to trade from H1 time frame and placing pending buy at 61.8, stop loss at 100%, take profit at minus 27, our return of this trade can be 2.3%. So if you win, you will win 2.3. If you lose only 1. It's exactly the same RR if you trade from the lower time frame. The difference from trading the lower time frame is that we can have more trading chances from lower time frame, and also our risk reward ratio will be the same if we trade it from the higher time frame, because we are going to repeat the scenario of finding an ABC pattern, use Fibonacci, divide the market into 2 zones, discount zone and premium zone. Because we are buying, we will wait for the market to drop to from the discount zone. I will have the 3 levels, 50%, 61.8 or 78%. We are going to place a pending buy, our take profit at minus 27, and you will see your risk reward ratio still will be 2.3 if you place your pending buy at 61. Let's go to the lower time frame and see how to trade this alert or this demand zone. I will move to M5 time frame. I will wait for ABC pattern to be confirmed. To start ABC pattern for buy, I will be looking for the lowest bearish candle and start from there. So now I will move the market looking for my lowest bearish candle. For now, this candle here is my lowest bearish candle. So I will see if the market will break its high by candle body or not. I don't have any lower candle, it's just the wick. So this candle here that I marked remains to be my lowest bearish candle. And the high is broken by candle body. So I have a confirm. For B, I want the low of the highest bullish candle to be broken by candle body or candle wick. So let's see. I don't have a higher bullish candle here. This candle here right now is higher than the previous bullish candle. So I will focus on this candle. We'll see. This candle here is not higher. It didn't close completely higher above the wick of this bullish candle. So I will remain, or I will keep this bullish candle that I'm marking its low with this red line to be my highest bullish candle. If you think or you feel comfortable that this candle here is your highest bullish candle because the body is higher than the previous body, it's up to you. I will just continue on how I see the market. Now I have the low of my highest bullish candle broken, so I got B confirmed. For C, I want B to be broken. Now I have B broken by candle body, so I have C here confirmed, and I have a breakout. Now I have A, B, C confirmed. I can use Fibonacci from C to the highest point of the market, or to the highest bullish candle, or from A to the highest bullish candle. For me, when I see A and C very close to each other, I prefer to use Fibonacci from A to the highest point of the market, and then highlight this area from 50% to my 100% as my buy area. So now I can start placing a pending buy at 50%, 61%, or 78.6%. My stop loss will be at 100% level. My take profit can be at minus 27. Let's place our pending buy somewhere in the middle, not too high as 50%, not too low as 78%. Let's place it at 61.8% and the stop loss at 100%. Take profit at minus 27. Risk reward ratio is the same, 2.38%. So it's exactly the same risk reward ratio. If you are trading from H1 time frame, your pending buy at 61%, your stop loss at 100%, take profit at minus 27%, your risk reward ratio is 2.3. If you are trading it from M5 time frame, your risk reward ratio is still the same, 2.3. But the advantage of trading the market from lower time frame, that you can make, or you can have more chances, more entries from the market. Your trade will be closed in a shorter time. These are the two main things why I prefer to refine my higher time frame alert and trade it from lower time frame. My trade will take shorter time to close, and also I will have more than just one chance to trade through the market. Let's move the chart and see what will happen. Now I have a higher bullish candle here, so I have to adjust everything. I will adjust my Fibonacci, also will adjust my pending buy over here, and let's just delete this buy area. We don't need it because we already have our pending buy. Okay. And see if the market will retrace and trigger our pending buy or not. Now the market retraced and touched just the 50% level, not the 61. Another retracement again on the 50%. Okay, the market did not hit the 61.8%, just the 50% two times and then go to the minus 27. So if we placed our pending buy at 50% and our stop loss at 100%, take profit at minus 27, we have got a good trade with 1.5 R. Also, scenario number 2, if we used Fibonacci from C point to the highest point of the market here, and we placed our pending buy at 61%, stop loss at 100%, still didn't get our trade triggered. So the market was moving strong upward. But we are not done yet. The first setup failed, we didn't hit stop loss. So the market did not retrace to trigger our pending buy. But now here we have a new breakout, right? The highest bullish candle, its low broken by wick, its high broken by candle body. So now I can use Fibonacci again from here to the highest point of the market, and again place my pending buy at 61%, my stop loss at 100%, and my take profit at minus 27. This is the market continuation, but we also understand that the market did not touch any of our demand zone here, and also we don't have D confirmed yet. We only have A, B, C, because as you know, for D I want the low of the highest bullish candle to be broken by candle body. Okay, this gonna be a little bit confusing, but let's move with the market little by little, and I will show you along the way, if this setup failed, how we are going to make it up from the A, B, C, D pattern. For now, we have only A, B, C, and double breakouts. The first breakout here and the second breakout here. Now we have a new pending buy. We deleted the previous pending buy. We don't need it anymore in that zone. And we have a new market setup after the new breakout. Let's move the market. Now we have another push, and then a new 61 and new market, a new minus 27. Again, we got to push the market a little bit. Wow. Again. And again. So now, see, the market is retracing down. Remember, I told you that I don't have D yet, right? Now I have D. Why? Because this bullish candle here is the highest bullish candle, and its low is broken by candle body, by this one, this bearish candle. So I have D confirmed. So I have a complete pattern now. A, B, C, D. Okay. And I have a breakout here that I'm trading. And also now I can use Fibonacci again for a bigger trading zone, for a bigger discount zone from A to D or from C to D. Let's make this time from C to D. So now I have two trades in one. I have two setups, right? The first one from this breakout to the highest point of the market, and the second one from C to D. So don't make this setup confuses you, because this is how it works. One trade or one setup back up the other setup. Right now we have two setups, one on the minor structure and the other one on the big structure. Let's delete this one and we stay with the small structure. Why I will still remain this structure? Because I don't have a break of structure here. D is broken by candle wick, not by candle body. So I don't have a break of structure. So I don't have a new market setup. So I will extend my take profit to minus 27 and my pending buy at 61. Now I have my pending buy triggered. I will play the chart and let's see if our take profit will hit or not. One more thing that we can do here is to look for a new market setup. We look for a new ABC pattern, use Fibonacci, find the discount zone and trade it again. We are not just trading and aiming for the market or the price to hit our take profit. There are many things to work on while we are trading. We can find a new market setup that if you like to increase your profit by the end of the day, that's the reason why we go to a lower time frame to find several market setups, not only one like from H1 time frame or H4 time frame. And also we have to understand if the market have a change of character, if the market have break of structure or the market have breakout. So we understand if and only if our stop loss hit, how to react after that, what to understand why the market did hit our stop loss. Okay, so our first pending buy was not hit. Now this is the second entry. We are aiming for the take profit to be hit and we start making some money. Now the market is moving up. As I said, now I have a break of structure here, confirmed, and also I have a higher low and potential change of character or potential choke. And we are talking here about M5 time frame, okay? And that would be our M5 time frame higher low. Now, from the lower time frame, M5 time frame, we have one pending order that hit the take profit and we are profiting 2.3 R. So now what to do next? This setup is already finished. We are done with this setup right now, but we are not done trading. We will stop trading from M5 time frame when the market from the higher time frame, from H1 time frame, reached the minus 27. Okay, as long as the market did not reach the minus 27 and we still have that uptrend movement, we can have as many entries, but we also have to respect our ABC pattern. Okay, now let's clean our chart. Our take profit here was hit, and then thank you here for Fibonacci and for this trade. Now we have A, B, C, D, and I have a break of structure and I have a higher low. This higher low over here is my new C. Okay, here. Why? If you remember in the second video I made about 3 or 4 weeks ago, I said for the market continuation, C will be my A and D will be my B. It will be A, B, C, and wait for D. But for me not to be confused, and I already know that the market movement is still bullish, A, B, C, D, I directly point this pullback here as C and wait for a new D. If you are not familiar with what I'm saying here, I would suggest you to watch the second video of the series that I started to make about 5 weeks ago, and you will find that part explained in details. A, B, C, D, C, D, C, D. As long as I don't have a change of character, I will continue C, D, C, D until I have a change of character. Now I don't have a change of character, so I will continue on C, D as I explained before. So what I can do now, use Fibonacci again from C to the highest point of the market, having a pending buy either at 50%, 61.8 or 78.6, stop loss at 100%. We will repeat exactly what we have done in the previous setup. Again, I'm not saying you have to place the pending buy at 61.8 or 50% or 78. You place your pending buy where you feel comfortable, okay? Maybe someone aiming more than 2.3 per trade, so place the pending buy at 78, maybe in between 61 and 78. It's really up to you, but the more important or the most important thing to respect is to start buying from the discount zone. So now we have Fibonacci, and we can again place pending buy at 61% and the take profit at minus 27, stop loss at 100, and play the chart and see what will happen. And again, we are going exactly to redo what we have done in the previous setup. Now we are going to move Fibonacci here and then adjust our pending buy level. Again, the market did not trigger my pending buy, which I placed at 61.8%, but the setup is not invalid yet because I don't have a new break of structure. So maybe the market will retrace back again and trigger my pending buy. Let's stop here for a second. If you are a high risk person, you may want to take more advantage of the market. How? By marking new ABC that you can see while the market is moving. How? Now, this candle over here is my lowest bearish candle. So I can mark it as A. Here, A is broken. Here, this bullish candle, its low is not broken. Now we have this bullish candle over here is higher than the previous one. Its low is broken by candle wick. So I have B. For C, I want B to be broken by candle body. So I have C here. Great. So I have a new A, B, C pattern. Again, I can use Fibonacci. My pending buy at 61 here remains. I'm not going to delete it, okay? But here I can place a new pending buy. You want to make it from A to B is okay. From C to the highest point of the market is okay. Or from A to the highest point of the market. You apply the same settings, the same setup again. So let's use Fibonacci here. If I am really high risk, I can use it from C to the highest point of the market. And I have a pending buy from the 50% to the 100. And as usual, I make it at 61. And one more I can do. Yeah, I can do from A to B. Okay. And place a new pending buy at 61 to minus 27. Here, almost the same setup. Okay. Let's move the market and see which one, if the market will trigger any of our trades. The 61, the first trade at the 61 from C to the highest point of the market is triggered. Stop loss was hit. The 78 of the second entry was triggered. And the market started to move up, almost hitting the take profit. So now I had one winning trade here, one losing trade, and another one winning trade, almost one winning trade from here. Why I didn't continue here? Because I want to show you another A, B, C pattern here. Look, this is the lowest candle. This is the lowest bearish candle here. It can be my new A. By the way, these ABCDs pattern or ABC patterns are internal patterns that the market keeps generating by its movement upward. So I'm not just sitting down waiting here for my 61.8 pending buy to be triggered. Well, I am a little bit risky. I can take a risk. As you can see here, I got one trade hit stop loss. The other trade was triggered even from the 78%, not just from the 61, and almost hit the take profit. And while this trade is moving, I already can have a new A, B, C pattern. Again, this candle over here is my A, and then I have B. Why? Because the highest bullish candle been broken here by candle body, and then B broken, so I have C. Okay. After I have A, B, C, I use Fibonacci, let's say from A to the highest bullish candle here, didn't go to the 50%. So I keep extending my trading zone until here. The market did not retrace to my discount zone. But here, by this candle, I have a breakout. Why? Because this is the highest bullish candle. It's low broken by wick. It's high broken by candle body. So I have a breakout. I have breakout here. So I can have a pending buy in this area. Also here I see D is formed, is confirmed. So I can have another setup from A to D. So here I have two setups. Here I have one trade running, and here I have a pending buy. So from here, I'm going to place again 61 and the take profit at minus 27. And for this also, I will place at 61, or even this one because it is small zone. So I can place it at 78. So I have two pending buy here. One trade is running from here and another pending buy in here. So in total, I have three pending buy. I have one running trade. I got one lose and I got one winning trade. So the first or the latest pending buy here hit stop loss. So by calculation, I had two losses and one winning. So I'm almost break even right now. And my second pending buy here is being triggered. And the market start to move up. And the take profit being hit. And the pending buy that I was sparing in here was not triggered. And now I have a new break of structure from M5 time frame. After marking our new break of structure, we have to move our higher low that's been confirmed over here, because this is the lowest point of the pullback, and also we have to move our potential change of character through. Okay, now we have a new market setup between this higher low and the highest point of the market. That indicates our pending buy over here becomes invalid and I have to delete it. Okay, if I want to make a new market setup, it will start from the higher low to the highest point of the market, again using Fibonacci from the higher low to the highest point of the market, and wait for the market to drop to the discount zone below 50%. That's the benefits of trading the alert that you receive from H1 or H4 from M5 time frame. If you receive the alert from H4 time frame, you also can trade it from M15 time frame. So if you have the time to refine your trading zone that you mark from the higher time frame, go to the lower time frame, take advantage from the ABC pattern. As you can see, the formation of ABC pattern or ABCD pattern is endless on the market. But as you can see here, we keep following the market trend or the market bias. We have our trading zone that we mark from the higher time frame is a demand zone. We have a confirmation that our market from the higher time frame is moving bullish. So we want to continue trading our market bullish from the lower time frame. Thank you for watching. If you are ready to take your trading to the next level and join community of like-minded individuals, head over to our website. There you will find exclusive content, resources, and the opportunity to connect with the fellow traders. Don't miss out, and let's grow together. Click the link in the description below to get started. Happy trading.